Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at what stocks are moving today. We can do that with Bloomberg's Tatiana Dare. Tatiana, what are you looking at?
Good morning. Kicking it off with GE Vernova, those shares up about 13% today after the supply of electric generation equipment boosted its buybacks from $6 billion to $10 billion, doubled its dividend to 50 cents, and issued 2026 guidance ahead of expectations. So lots of positive updates here for investors. The company, of course, has benefited from soaring U.S. demand for electricity, driven by the data center build out in the country related to artificial intelligence. And perhaps this quote from the CEO sums it up. He says, AI is the real driver for us right now, which also really encapsulates the state of affairs for many utilities and power companies right now. And its particular expertise in high and medium voltage technology boosts its potential to be a partner for the hyperscalers investing in these data centers out there. Investors are certainly recognizing that potential. Shares are up more than 100% this year, one of the best in the S&P 500 and the best in the industrial sector.
All right, Dr. Well, speaking of AI, I'm sure that this company that you're going to be talking about will also be speaking about that later at their results. What can you tell us about Oracle?
Exactly. Another core name to the AI theme. Oracle reports today. Its shares were down about 1% earlier. It's flat now. The company is an important one to watch because first, it's a core name for the AI theme, but also for credit. Just not too long ago, we've seen its credit default swaps soaring to the highest since the global financial crisis at some point, as Wall Street is really worried about this company stretching its balance sheet for the AI capex and build out. And analysts here expect a really big focus on cash flow and expect free cash flow to be negative for the next couple of years. So the bar is really, really high for this earnings report. And Wall Street is expecting a pretty high move. Those options imply about a 10% swing in either direction today.
All right. When I go to Cracker Barrel, this is what I do. I unbutton the pants, sit down, undo the belt notch, and then you get the country boy breakfast with a country ham. That's the meat choice. Biscuits and gravy, extra gravy. And then I order a pitcher of iced tea, and then I say, just leave me alone for a couple hours. That's how I go. So what's happening with our friends at Cracker Barrel?
Well, if you were part of its core audience that did not return after the marketing change, then you are to blame.
People don't like change.
Yeah, exactly. Traffic declined here 7% in its first quarter. The dining chain reported weaker than expected sales for the first quarter, cut its annual sales and profit guidance. This really goes to show this company is still struggling following its backlash after that failed logo has since been returned and reversed. But the shares tumbling 35% since mid-August, since that change, and have not been able to recover. That just goes to show how hard these marketing changes are.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.